Oil prices managed to extend gains, hitting the level of $96 per barrel. The asset gained a strong upside momentum after the news that U.S. crude oil stockpiles edged sharply lower. Besides, the quotes were supported by rumors that China might soon move away from its stringent zero-COVID policy. Speaking of the balance between supply and demand in the global energy market, traders are more concerned about whether Russia will have time to redirect its oil supplies from Europe to Asia by December. After all, the EU's ban on Russian oil will take effect in December. In addition, the United States still intends to impose a cap on Russian oil prices by that time. In this case, Russia will have to refuse to supply oil to those countries that join this initiative. China and India, the largest energy consumers, have no plans to introduce such measures. If Russian companies are unable to redirect all its seaborne oil exports away from Europe to other countries by December, the oil market is likely to face shortages. This fact will contribute to further gains in oil prices, especially given that there are no reports of new export contracts between Russia and Asian countries yet. From a technical point of view, Brent crude oil futures have fully recovered from their recent collapse. The asset is once again drifting around $95 per barrel. This indicates that the market's uptrend remains intact. Thus, Brent crude will continue its bullish run if the price consolidates above the mark of 97.50. Alternatively, a return below $94 may result in the asset's another attempt to break through the support level of $92. Meanwhile, gold continues to hover around $1,650 per troy ounce. Moreover, the metal is about to break through the round level of $1,600. And this is hardly surprising, as the US Federal Reserve keeps raising interest rates. So far, gold futures have not been able to overcome the $1,630 mark on the first try, with the following pullbacks bringing the quote back above $1,650. The downtrend is still in force. Nevertheless, things can change if the quote hits the resistance level of $1,670. In this case, the market may see a shift in investor sentiment. Until then, the risk of a price return to at least $1,630 remains. The only thing that can save gold from falling and contribute to its return to the level of $1,600 per troy ounce is the Fed's policy shift. If Jerome Powell not only confirms that the US regulator will lift its refinancing rate by 50 basis points in December, but even hints at a slowdown in its aggressive rate hike pace, gold will most likely gain value. If the head of the Fed somehow signals a possible rate cut in the first half of next year, the yellow metal will have a chance of rising to $1,600 per troy ounce and even consolidating above this mark. As for the Russian currency, the situation remains unchanged. The ruble continues to trade around 61.50 rubles per dollar. In recent months, the ruble has repeatedly traded sideways, with the subsequent downward moves followed by a fairly quick return to the area of 60 rubles per dollar, and this was usually preceded by lower volatility, which is happening now. The only question is when trading activity will resume and the ruble will enter a new cycle of temporary losses. Thus, as soon as there is a strong news driver, the dollar-ruble pair is likely to get out of its 60.80 and 62.00 range and gain strong upside momentum. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.